Thinking about buying your first home? Then you've probably been told you need 20% down, 800 credit score, and a miracle. I'm Amber Ross with eXp Realty, and I'm here to tell you that most of what you've heard is either outdated, exaggerated, or flat out wrong. Today we're debunking the top 10 myths that are keeping first-time buyers on the sidelines. Whether you're looking at a high-rise in the city or a cabin in the woods, let's get you the truth so you can actually get the keys. Now, I specialize in the El Dorado County market. Everything from the foothills of Placerville to the gated communities in El Dorado Hills. But even if you aren't looking in my area, these rules of real estate apply across the board. Real estate is local, but the financing and the strategy, that's universal. My goal is to make sure you have the most knowledge possible when you go to sign that contract. Let's jump right into it. Number 1, you need 20% down. Myth. Really, the 20% rule is relic of the 1950s. We're in 2026, and the average first-time homebuyer puts down 3 to 5%. FHA loans require as little as 3.5%. Conventional loans often have 3% down programs for first-time buyers. VA and USDA, those loans are 0% down. But there is a catch. You will likely pay private mortgage insurance, PMI. But most of the PMI is lower than the cost of waiting years to save $100,000 while home prices rise. Also, a side note, if you are buying a second home as your primary residence, you only have to put 5% down. Or if your partner, even if you're married, hasn't been a buyer before, they can qualify for as little as 3% down. Number 2, first-time programs are free money. Myth. Come on, you should know there is no such thing as free anything. Most of these grants are actually silent second mortgages, and they come with strings. You often have to stay in the home for 5 to 10 years before the loan is forgiven. If you sell or refinance early, you'll have to pay all of it back. CalHFA is only for low-income borrowers. That couldn't be further from the truth. CalHFA, California Housing Financing Agency, has moderate income limits that are surprisingly high. In some California counties, you can make over $200,000 to $300,000 and qualify for assistance. Here in El Dorado County, it's right around $230,000. Think about that. You and your partner could be making nearly $250,000 a year and still qualify for down payment assistance. Number 3, I know everyone has heard about the Dream for All program, and obviously it's a guaranteed handout, right? Wrong. It is a shared application loan, not a gift. Here's the deal. The state gives you 20% for a down payment. Now, in exchange, you pay back the original 20% that they gave you, plus an additional 20% of whatever profit appreciation you made, which means if you sell your home and make $100,000, you're going to give them back $40,000. Also, it's a lottery. In exchange, this program is still handled via randomized voucher system. You don't just get it. You have to win the lottery to use it. And there is only about a 10 to 11% chance of winning. There is so much more that I can talk about on this program, but I'll save that for a future video. Number 4, pre-qualified and pre-approved are the same thing. Nope. And if your agent is telling you this, find a new one. A pre-qualification is a glorified conversation. A lender looks at your self-reported info and says, yeah, that should be fine. It's worthless in a multiple offer situation. A pre-approval is a verification. A lender has run your credit, verified your W-2s, and looked at your bank statements. They have a full financial picture and have given you your budget. This is essentially your house hunting license. It means you have done the work. It is the golden ticket your agent will submit with your offer, telling the other side that you are truly ready and capable to complete the purchase. When I send an offer For my buyers, I not only make sure to have the pre-approval attached, but just in case there are any questions, I include their lender in the submission. Number 5, you can get pre-approved after you find the house. Not true. Sure you can, but really that's backwards. If you find your dream home on a Sunday, but you don't have a pre-approval letter, someone else will have an accepted offer by Monday morning while you're still trying to reach a loan officer. Lender first, house second. Number 6, an FHA loan is only for first-time buyers and USDA only for farms. Anyone can use an FHA loan as long as it is for your primary residence. You can use it on your 10th home if you want, as long as it is for your primary residence. USDA is for geographic areas, not occupations. You don't need to be a farmer. You just need to buy in a rural designated zone, which includes many suburban feeling neighborhoods. A lot of El Dorado County is this. I actually used a USDA loan for my first purchase on a 1/4-acre lot right in downtown Diamond Springs. Number 6, I'm waiting for interest rates to drop. Please stop saying this. Think about it. When rates drop, competition explodes. If rates drop from 7 to 5%, millions of buyers who were on the sidelines will rush the market. This creates multiple offer situations that drive home prices up far more than the 2% interest savings would have helped. You've heard the mantra, marry the house, date the rate. You can refinance the rate later, but you cannot refinance the price you paid for the house. Not to mention, if you are pressured into buying something you don't truly love or it doesn't work with your lifestyle because you got a great rate, but you also overpaid because of the competition, the equity you would have gained is non-existent by the time you decide you can't stand the house. Just ask your friend who really needs a second bathroom but bought that COVID house. Number 8, the inspection is pass-fail test. No, an inspection is a status report, not a grade. A house cannot fail. The report tells you what's wrong. The roof leaks, there's old wiring, your toilet is loose. Then you decide if you want to fix it yourself, ask the seller to fix it, ask for a price credit to go towards your closing costs, ask for a price reduction, or simply walk away. Well, I'm buying a new home and I don't need inspections. Yes, you do. Builders make mistakes. Finding a disconnected HVAC duct or a missing attic insulation now is better than finding it in 5 years. Number 9, going directly to the listing agent saves you money. Oh boy, the listing agent has a fiduciary duty to the seller, not to you. Their job is to get the highest price for the seller. If you go to them directly, you are essentially asking the seller's lawyer to represent you in a divorce. In 2026, post-NAR settlement, buyer's agent commissions are more transparent, but having someone in your corner to negotiate repairs and price is worth every penny. Plus, we are still seeing sellers accept to pay for a portion, if not the full cost of buyer representation. You just have to ask. Number 10, every fixer-upper is a bargain. I wish. In the age of HGTV, everyone wants a fixer-upper. I went through my Chip and Jo phase too, but there is a difference between a cosmetic fixer and something that needs to be gutted. After you pay for materials, which are expensive in 2026, and labor, you often spend more than if you had just bought a renovated home. If you are considering a fixer, find someone to help with cost breakdown and really make sure you are not only looking at everything the home needs, but also what it might end up needing. Bonus myth number 11, the California FAIR Plan. If a house is in a high fire zone, it's uninsurable and I cannot get a mortgage. Not true. No home is truly uninsurable in California, but it might require the FAIR Plan. Here in El Dorado County, it is very common. The FAIR Plan is California's insurer of last resort. It is a private association, not taxpayer funded, that must provide basic fire insurance to anyone who can't find it elsewhere. People think that the FAIR Plan is all they need. False. It covers fire, smoke, and lightning. To protect your home from theft, water damage, or liability, you must pair it with a difference in conditions, DIC, or wraparound policy. In our county, the FAIR Plan is common. It doesn't mean the house is a bad buy. It just means we need to factor that premium into your monthly budget early. 2026 update. Under the Sustainable Insurance Strategy, many big name insurers are returning to high risk zones, but they often require hardening like defensible space and ember resistant vents before they'll give you a standard policy. Now, here's the secret. When you're house hunting, look for the FireWise communities. Living in a FireWise recognized community, like many we have here in the foothills, isn't just about neighborhood pride. It's about your wallet. The California FAIR Plan offers an automatic discount just for being in one of these areas. El Dorado County has one of the highest concentrations of FireWise communities in the state. Buying in one doesn't just mean a cheaper bill. It means you have a neighbors who are actively working to keep the whole street from burning down. And that is pretty awesome. Look, the path to homeownership isn't a straight line, and it definitely shouldn't be a scary one. If you're feeling overwhelmed by the headlines, or you just want to know what your specific numbers look like, I'm here to help. If you're looking in El Dorado County or the surrounding Northern California areas, I'd love to sit down and grab a coffee with you and map out what a plan might look like. And if you're watching from anywhere else, drop a comment below. I'll answer your questions right here, or I can help you connect with a trusted pro in your area.